Hi guys, Aslam Khan here to teach you today 7110 paper. This is accounting. I'm very happy to see that students are learning a lot of things from my channel. Please do not forget to subscribe and learn with me in future also. I have shared 7707 papers for you to do before your exams. Those are the recent papers which has come before your exams this year. So I want you guys to just review it before we move on to this content. So have a look on 7707 papers clearly on paper one. Then you can start doing papers of October, November, and May, June of 2019. So let's start, guys, how to do this paper. I'm going to explain you very simply these papers. Now, this is 30 MCQs. On your new 7707 paper, the MCQs are 35. So with that understanding knowledge, I'm going to take my spotlight here to teach you. And also, I'm going to zoom a bit so you'll have a clear idea of what I'm reading. So let's start. Which task would be carried out by a bookkeeper? So what's the difference between a bookkeeper and a financial accountant? I have explained this very clearly. A bookkeeper is a person who just records the day-to-day transaction of a business, whereas a financial accountant prepares and he prepares financial statement. His all transactions are related to financial statements. So let's see if there's any financial statement transaction. It is not related to the bookkeeper. So I'm going to start A, comparison of financial statement between years. So this is accountant's work. Preparation of financial statement, accountant's work. Provision of information for decision making. You are giving some sort of information for decision making. Again, your bookkeeper's information will be taken, but not to the extent of a financial accountant. So you need to understand the answer is recording financial transaction, like basic day-to-day things he will be recording. So answer is going to be D. So if you guys have got D, it's good for you. Then let's move on to the next part, guys. We are going to learn the second part. I'm going to move on to the second question. Why does the owner of a business calculate profit? What do you think? Why does he need to know how much profit he's earning? I'll start from D. To know the loan interest he can afford to pay. It's not about how much money you should be able to pay on interest, because you need to have overall knowledge about how a business is calculating profit. The main scope of a business to calculate profit is to know how much money you have made out of the investment you have made. So here you might see it's not the exact answer what you are expecting. To know how much he can borrow from the bank, he might consider how much business have to might borrow, but it's not directly a concern of our owner. To find the total expense somewhat, but still not directly. What he need to get on A, this is the answer to find the return on capital, on the amount of investment you have made, how much return you are making. You need to know. That's what a business need to calculate profit. So this is the basic thing you need to know when it comes to calculation of profit. These are easy transactions which I'm not going to spend much time on explaining these things. Very straightforward. Quickly you can do it. Then we'll move on to the third one. Yeah, if it is important, I'll stop and I'll explain you. As your exams are nearby, I can't take hours and hours and explain the small short parts. Which transaction will increase both assets and capital by the same amount? So they're asking, they have given few transactions and they're asking how are they going to affect assets and capital. What are the ways it is going to increase? When it increase, assets and capital will increase in the same amount. Remember, guys, if you do not know what is double entry, you can't learn accounting. You're on the wrong video. If you need to know what is accounting, go to my playlist. You might see grade 10 and 11 there in a playlist. In that, you will see chapter 4, introduction to accounting, and chapter 5, accounting equation. Know that before you come into any of your past papers, because knowing accounting equation is very important to do accounting. So many students, what they do, they just directly come to the past paper. They don't understand what I'm speaking. Then they'll feel like they have lost in an alien world. So let's move on to the point we want to discuss. Which transaction increase both assets and capital by the same amount? A credit customer settled his account after deducting a cash discount. Now I'm going to move on to my Excel sheet, guys. I hope you can see this. Now I'm going to put A equals C plus L for your understanding. So I'm going to write A equals C plus L. So I'm gonna make C plus L. So I'm gonna, yeah, give me a second, guys. So A equals C plus L. So I'm gonna write here. Now, what is the first transaction they are given? Let me move on to the question. It says that a credit customer settled this account after deducting a cash discount. So if a debtor pays money, okay, if a debtor pays money, debtor is decreasing. So debtor decrease means it is a credit. So debtor decreases means in Excel sheet I'll consider it as a minus value. So if he is example for the first one, if he is paying 100 rupees and in 100 rupees is getting a discount of 20, he will the business will have 80 increment, and the business will lose 20 because he's giving a discount allowed. And again the business will get 100 of cash. So 80 debtors paid. I'm just giving an assumption, guys. Always remember when you're doing a sum, you need to have this assumption. I think this formula is wrong. Yeah, so you need to have assumption when you do the sums, then only you can be able to understand. You got 100 cash maybe, so 100 plus cash, and here you might see minus 20. So this minus 20 is going to be the discount allowed. You have discount allowed, so those expenses you will be recording it under recording it under capital. So now you need to understand. Okay, again, as I said, you know, if you do not know how to record a double entry, this is not, it is not the right video, guys. You need to watch that before you come into this content. Now you want to understand one thing, guys. If data is paying, his money is decreasing, cash you are receiving, actually you should receive or say data is paying 100 rupee, $100 worth of amount, but you are receiving only $80 worth cash. So you received more, his value has decreased more than the money you have received. So minus 100 plus 80 is 20 different, that is minus 20. That minus 20 you should deduct under capital, because that's how. But here the question is that the asset and the capital will be increasing with the same amount, which is not correct. So answer number one is wrong. So let me move on to second assumption, and I'll find is my answer correct. I'm moving on to the second one. It says that goods were sold at a price higher than their cost price. So goods were sold. So good is a asset, and also what to say, good is an inventory. So inventory is going out of the business, but you're getting a profit out of the inventory. That's what they are trying to mean in that. So if I say my inventory is inventory of 50 has been sold for 70, so I'm considering inventory here. Assumption is very important. As I said, guys, you don't know how to assume. You are not knowing, you don't have knowledge about accounting. So minus 50 is your inventory, and now you have got inventory minus 50, and maybe you got 70 cash. Now actually the difference between your minus inventory, I always forget this mark. So actually you got plus 70 cash and minus 50 inventory. So what they are trying to say is you are actually earning more than your inventory's value. Now you got a profit of 20. This 20 should be added to the capital column. So now I'll show this 20 is a profit. So you write here profit or something. So now what do you see, that actually the change in the asset and the change in capital is giving the same value, right? You're getting the same value, which means 50 minus 50 plus 70 is 20. And again, capital is increasing by 20, which means it is giving the same value. So if it gives the same value and if it is increases by the same value, this answer is the correct answer. Remember, guys, why did I add the capital? Why did I add profit? And why did I deduct expenses? You need to know one thing. If I deduct expenses, according to A equals C plus L, expenses and income should be adjusted under capital account. Let's move on to the next content of this question. Yeah. So we have done with the adjustment number 2. Let's move on to the third one. Is it correct or wrong? So answer is 2. We already found it because it is increasing in value in both assets and capital. So answer is good was sold at price higher than their cost price. It increases both assets and capital. Now I want to know, is it increasing the C part the same way? Rent received included an amount prepaid for the next accounting period. So when you receive an income for the next accounting period, let me move on to the assumption sheet again. So I'm gonna take, maybe you are getting 1,300. Maybe for a month rent is 100. So you got 1,300. Actually now you need to reduce the level of rent because you have got prepaid. So if you have got prepaid, what are the double entries? Your capital will decrease by 100 because it's a prepayment. You can't keep it in the business. So I just assume it, guys, because I said that if rent is 100 for a month, for 12 months it is 1,200. But unfortunately they pay 1,300. Listen to me very carefully, guys. So 100 should be deduction because it is 1,200 is the amount you should get, but they have paid 1,300. That 100 you should deduct it in the profit. Now where do we deduct the other prepayment balances? You will add it to the current assets. So normally under current asset, prepayment will become an addition. Now this 100 plus and 100 minus is not getting you the same value. It's not increasing the same way. So it is completely wrong. So most of the time you will present it under asset. Even prepayments is not shown under capital, but if it is a prepayment, you can't, as there's no expenses shown here. I'm just showing it for you in this way. So moving on to the fourth adjustment, why it's wrong, guys. If you see, the owner repaid a business loan from his personal bank account. So when he pays from his personal bank account, it's a capital. He has invested some sort of money to the business, so his capital increases. But business loan, so liability decreases. Again, it's not related to assets, because when I pay a loan, your money, cash is not going out of the field. He's paying from his own money. So when he pays from own money, he's investing into the business. When he invests money into the business, what happens? your capital will go up and your liability will decrease. I can show you in this assumption sheet in this way. If you see here, capital, like for example, if they are taken a bank loan of 5,000, if I pay the bank loan, is an expense he has paid. So 5,000 will, he has invested money from his personal cash. He has paid the 5,000 loan, so it's a plus for capital and minus 5,000. Now it didn't actually affect the asset, so you will not take fourth one as a adjustment. Now if you see here, whereas two pluses on one assets and capital, only under adjustment number 2. So you need to understand the basic stuff when you're doing this. So adjustment number 3 we have finished. Answer is B. Let's move on to question number 4. Question number 4, it says that a trader purchased a motor vehicle for his business using a check from his personal account. So he's now, as I said, the last adjustment here. Third adjustment number D, and question number 4 question itself the same. So they're saying that a trader purchased a motor vehicle for his business using a check. So when a owner purchased something for the business using a check, remember guys, it's an investment he has made from personal bank account. So what he has done, actually, motor vehicle is coming to the business. So what you need to know, what type of double it is. So motor vehicle is increasing, guys, and also what is increasing, for his business using a check from his personal bank account. So when he is using from personal bank account, again, personal bank account you will not take. What you need to take, you need to take only the thing which comes into the business. Now he is investing from his personal bank account, so he's investing as a capital. So capital increases. What increases? Capital increases. Now this money check from personal bank account is the capital increment. So because he's putting from his own funds, he's investing into the business by paying for the motor vehicle. So motor vehicle is an asset account. Asset account increases, it is a debit. And what account is credit account? Capital account is a credit account. So if capital increases, it is credit. So answer for fourth one is D. It's very straightforward, guys. So if you have done, most of the people will ensure that it is bank, it is related. If you see, some people will go with C because he has paid from bank. So bank value should be the amount we should go down, because it's an asset, it goes down. But actually it's not bank, guys. When he is specifically paying the money for the bank account, it is capital. So I hope you understood the fourth one. Let's move on to adjustment number 5. Okay. What does it say? I'll erase this off. On 1st May 2000, Wahid issued an invoice for credit sale of 10 years to 10 shares to Yasir at a list price of 40. Now you need to be very careful, guys. Cambridge examination is not that easy. They'll be very tricky on this area. So Wahid is issuing an invoice for a credit sale. So he's issuing for credit sale 10 shares. How much shares? 10 shares to Yasir at a list price of 40 each. So if one share is 10, okay, so if one share is 10, one share is $40, 10 shares is $400. So trade discount of 10% was deducted. Trade discount you cannot take into the books of accounts when you're invoicing. It's then and there discount, as I taught you in 770.7 also. There are two discounts. One is cash discount, other one is trade discount. Cash discount is what you will give when it is when you need to receive the money, or when you need to pay the money a bit quicker. So you get cash discounts under discount allowed and discount received. So it's not cash discount, it is trade discount. You should deduct from the invoice and get the value. Now here 400 is the actual value, because 10 charge into 40 you will get 400. Yasir returned the 5 shares on Wahid on 15th May. Now you need to be very careful on that question. Now Yasir is returning the goods to Wahid on 15th May. So I'll explain you this very clearly, guys. Now see here, what was the value of the invoice issued to Yasir? What happens to student? They will calculate 40. They used to calculate in this way. 40 into 10 is actually 400. So 400 is good, and they get a discount. 400 minus 10 over 100 percentage, which is you will get how much? Yeah, 360. So you will take 10% out of 400. You will calculate and you will deduct from the 400. So 400 minus 10%. I can calculate this way and show you. 400 into 10 over 100 is 40. So I'm gonna take 400 minus 40. I will receive 360. So now I got 360. Now this is the money I have issued to Yasir, the invoice. Okay, the basic invoice. But what students they do is, okay, now I will still finish it off, guys. Students find it now. Yasir returned 5 shares. So what they will do is 360 is the list price. So in that they have returned the 5 chair. So one chair is costing maybe 36 rupees. So 5 chair, because they have already deducted the discount now. So I'll divide it by 2, or I can divide it by 10. So I'll get one chair's actual price 36. So return 5 chairs. So 36 into 5, you will get how much? 108. So 180 is the amount of charge he has returned. So from 360, if I take 180, if he has returned, he has left balance of 180 in the invoice. Now students, we'll go with two answers in this. First, particular students who are very knowledgeable will see the question: what was the value of the invoice issued to Yasir? So Wahid is issuing to Yasir, which is 10 charge into 40, 400. In that 10% discount you are getting, which is 360. So actually the amount of money he is issuing from 400 to 40 deduction 360. 360 value is the answer, which should be your examination answer, so which is C. So if you go with 180, the reason people didn't read it carefully: Yasir is returning the goods to Wahid. So when Yasir is returning the goods to Wahid, it's not a part of this invoice. They would have said it is as a debit note which has sent by Wahid, Yasir to Wahid. What is the debit note? So debit note means the return outwards which has been made for from what is it from Wahid, from Yasir to Wahid. From Yasir's side, it's debit note. From Wahid's side, it's credit note, guys. So again, I remind you, 118 was, you are people who got A answer. They're somewhat clear, but again, A answer is wrong, because you need to read the question. They didn't ask who issued to whom. That's what you need to know. Why they issued to Yasir? That's invoice. So invoice is calculated about according to this way I have shown. If they have asked what Yasir what Yasir issued to Wahid, then of course the answer should be 180. So with that assumption, we move on to the next part. I hope you understood this area. Let's move on to the sixth question now. Okay. Okay, let's move on to the point we want to discuss. Which document will a customer issue? Yeah, give me a second, guys. So which document will a customer issue to inform a supplier of an overcharge, guys? Remember, when it comes to debit note and credit note, people get always confused. Let me explain you in this very easy way. Credit note and a debit note is issued between a customer and a supplier, guys. So when a customer, credit customer and credit suppliers are the ones who are going to deal with credit note and debit note. So I just want to give a small explanation about this. It's very easy, guys, but people get confused at this area: credit supplier. So now if I take credit customer and credit supplier, remember credit customer is a debtor. So debtor will issue a note to the credit supplier that his value should go down because they have sent a good which they have not requested, or maybe expired, something like that with the reason. So credit supplier is also known as the creditor. So I consider him as creditor. So creditor is also known as payables, trade payables. So data is known as trade receivables, guys. So when it comes to credit customer, when he has something to inform the supplier, he will issue something called debit note. Because he's a debtor, he will issue debit note. Creditor will issue what note now? It's all C. You can easily understand credit note. But it's point of perspectives, like who is issuing that, you need to know that. Here it's a customer issuing to the supplier, so it is a debit note. You guys already found it. Statement of account will not be sent by it will be sent by the supplier to the customer, reminding how much money he needs to owe. Invoice can be sent by supplier as well as customer. So it should be said purchase invoice or sales invoice. When it comes to credit note is sent by the credit supplier. So the answer is B here. And you need to know, guys, this is very easy, but people find it difficult. I don't know why. You need to know who is customer, who is supplier, first of all, when you are going to what do you say, send a document. And debit note is related to return outwards, or we say it as purchase return. And credit note is related to sales return. Then we are done with this area. I'm gonna erase this off. I'm gonna move on to answer is this. You will get answer debit note, which is B. So I'm moving on to the next part of this question, which is seventh one. Let's move a bit quickly because these are very easy areas. We can easily discuss faster. On 1st October, the bank column of Kim's cash book showed an overdraft of 120. She was then notified that a check 80 received from a customer in September had been dishonored. Note this month when you're doing the sum. Actually, this month they are specifically saying that it's October's bank column, and she had a balance of overdraft 120. So overdraft means your bank column will have a credit balance. And what happened? Actually, the credit balance now it is getting a dishonored check. So dishonored check means bank column should dishonored check means what is the double entry, guys? Debtors account. Yeah, dishonored check. How do you write the double entry for this, guys? Dishonored check. So this dishonored checks double entry will be, guys, the debit what to say debtors account and credit bank account. That's how the dishonored check will be. So when they debit again credit the bank account, here it will become actually 80 is the amount which is getting credited. So I'll take this sheet here, and no, I don't want to use Excel, guys. I hope you understand, but still I don't know will you understand it or not. I just do here. If I take a bank account, okay, if I take a bank account for understanding, I'm going to draw this and I'll write here bank account. So if I take a bank account, actually I have brought forward balance on the credit side, which is 120. So he's issuing a check. So you need to know the double entries, as I said. So when there's a dishonored check, it's debtors account debit because his value is again getting added. And what account is credit? Your account is getting credited. So because the amount what he has given is not actually there on the account. So it should be 80 here. So this is dishonored check in your bank account. So dishonored will increase your amount for the particular. Yeah, so dishonored check, right here, dishonored check. Now what's your actual value for the end of the month? You will have carried down 200. If I finalize this sum, okay, I'm going to do this and here also. So here you will have 200 in each side. When you set off your ledger, when you bring your brought forward balance for the next month, you will have 200 on the credit side. So now the question, I hope you guys understood the basic stuff. So let's move on to the question. What is the answer? Credit rupees 200. So this is the cash books balance after this adjustment. So answer is B, guys. So then we move on to the 8th part. Which statement shows about which statement about a bank reconciliation statement is correct? It is a part of the double entry system. It is prepared by the bank to compare the cash book balance with the bank statement balance. Now again, let me remind you certain terms. It is part of the double entry system. It's not a double entry system part, so it's wrong first of all. It is prepared by the bank. Remember, guys, bank reconciliation statement is not prepared by the bank. It's prepared by the trader. Trader means the person who is running the business. So this definition is wrong. They compare the cash book and bank statement. It's correct. So whoever going with B, it's wrong. C is correct because it is prepared by the trader, which is the business, to compare the cash book balance with the bank statement. So answer is C. It is only prepared when the bank account is overdrawn. Overdrawn means there's too much value is not there. Means only you will do that. No, guys, bank reconciliation is, statement is done to correct how much of things they have actually, how much of money actually the business has, and how much of money the bank has. To see this, they used to do bank reconciliation statement. Then we move on to the ninth adjustment. Is easy, as quick as easy. That easy, guys. I think, yeah. So another question, as I said, guys, you need to have a clear understanding when you're doing accounting paper. A thorough understanding about the double entries is very important when you're doing paper one. Okay, so let's start. At the end of the Leroy's financial year, it was decided the balance on the telephone expenses account 340 $40 should be split 90% for the business use and 10% for personal use. Now you need to understand, guys, 340 is 90% only go towards what we say the business. So I'm gonna divide this 340 into 90 over 100 is business, which is 306. So what is personal use he has taken? Personal use, which is also known as drawings. Whenever you take for personal use, as I said, you need to know these basic double entry steps. So 36, 34 is your personal use taken as drawing. So drawings is an expense. Expense should always be in debit. Now let me see. Let me first of all find out where I have drawings 34 and expense. Answer is A, because in B you know, yeah, answer should be A or B. C and D I can't take because it's on the credit side. It's wrong. So I will not take C. So let me erase this part. So I know that 34 should be either A or either B because drawings is on debit side. Now, where do I send for when I send for income statement? Do I send for debit or credit for income statement? So expense in income statement should always be a debit. So telephone expense account, I will credit the amount. I will transfer that to income statement. Debit 306 and 35 I will debit to drawing. So answer is A again when it comes to this. So you need to know that income statement, why income statement is having a debit, because it's an expense. Expense are shown on the income statement as debit. If it's income, and income statement should show it as a credit. So the total value should be credited on the telephone expense account, and this should be transferred to drawings account and income statement. If I show it you in your Excel sheet, you will have a clear idea about what I'm talking. Let me take two accounts, guys. Yeah. I'll take two accounts to explain you how this works. So I'll use this part, and again another border. Okay, so it happens this way. Okay, so now see here, I have taken here telephone expense, telephone expense. I have taken here, I can take here, I'll take telephone expense and drawings. Yeah. So actually telephone expense was for the particular month 340. So they are going to maybe cash or bank they have paid. I don't know. Have they said cash or bank? Let me see. The question sometimes they might give. Finally, it was desired balance of telephone expense account was split between. They are not said how did they pay that actually. So I will consider it as cash for my easy preferences. So I will write here 340. Now I'm going to send for income statement. I will write here IAS, and I will send 306, and for here I will send 34, saying not income statement drawings. So this credit will become a debit here as 34, and also income statement will become 306, not 306. So income statement will be shown on the profit and loss account. Here you will say that's telephone expense. This is how you show an account like this. So I hope you understood the basic way of recording this double entry. So when we credit in telephone expense account, on a telephone expense, I mean on the income statement, it will become a debit. So having that clear understanding, we'll move on to the next particular part of this question. You might see, yeah. So ninth one answer is, guys, what is the answer we got? It is A. So I'm going to say it's A. So mark that A. With that knowledge, we are moving on to the 10th adjustment. First few adjustment was very easy, I think. So the last 20 might be a bit difficult on accounting area. The following account appeared in Amna's ledger. See the account. Remember, guys, when you're doing a sum like that, you need to know which ledger, which account. First of all, see in the details, what do you have? Do you have purchase or sales? If it is a sales, it is, say it is a credit customer. If it is a purchase, say is a credit supplier. So actually, Amna's ledger Sayed is a sale, which is a credit supply. And also you can see the balance brought down is on the debit side, it's a debtor. So Sayed is a debtor. So Sayed owes Amna. So that's how I find it, because in Amna's ledger, Sayed has taken some sales. So in Sayed's point of view, Amna is a creditor. Amna's point of view, Sayed is a debtor. So having this is a very mindset you need to know. How did I find this, guys? Very easy. I found sales here. Yeah, I'm sorry. I'm not good in drawing, as I said, guys. I'll erase it off. So I found sales here. So sales here means it's a credit customer. So Sayed is a credit customer. So Sayed owes Amna. Sayed owes Amna, and Amna should receive the money from Sayed. So let's move on the answer they are given, guys. Let's see what they have given. I'm gonna use my spotlight here. Yeah. Which statement is correct? On 1st September, Amna owed Sayed 400. So as I said, Sayed owns Amna, not Amna owns Sayed, because Sayed is a credit customer, so he need to give the money towards Amna. On 14th September, Sayed purchased goods 600 on credit from Amna. Yes, it's correct. Now students get confused. Now this is a sale. How can it be a purchase? That's what they always think. Now see from point of Sayed's point of view, Sayed is taking $600 worth of goods from Amna. For Amna's account, Sayed is a credit customer, right, guys? So for Amna's account, Sayed is a credit customer means when Sayed purchased from Amna, for Amna, he has made a sale. But for Sayed, it's a purchase. From Sayed's point of view, he had made a purchase, but in Amna's point of view, she has made a sales. That's what you need to know. So answer is very straightforward. It's they are given. It's already. You don't want to think much onto this area. It's B. Because we understood that Sayed has purchased the goods, but under Amna's books of account, it says. But if they have said Sayed's books of account, it should be shown on the details column, it should be shown as purchases. On 26th September, Amna paid Sayed 390 by check. It's Sayed who is paying 390 by check, not Amna again. On 26th September, Sayed allowed $10 cash discount. Amna is allowing Sayed the discount, not Sayed, guys. So I hope you guys got a clear understanding about adjustment, 10 adjustment. I'm going to erase this stuff. Let's start 11th adjustment now. Let's erase this guys before we move on to the next content. Okay, guys, let's start the 11th sum. A supplier's account in Shilpa's ledger showed a balance owing on 1st October 2000 of 1st October 3400. So supplier's account in Shilpa's ledger, which means under Shilpa's account, it's a supplier. So supplier is a credit entry because it's a liability. In October, Shilpa purchased goods 860 and returned goods 55. During the month, she made a payment of 2000. What was the balance on supplier's account in Shilpa's ledger on 1st November? Easy. You need to know how to do this purchase control account, or you can say it as ledger, creditors ledger account. I'm gonna draw up a creditors ledger account in my sheet, so you will have a clear understanding of what I'm gonna do. I'm gonna copy this down. I think I am sharing the Excel sheet. Yeah, I'm sharing Excel sheet for you. So I'm gonna write here Shilpa's suppliers account, because Shilpa's is recording supplier values in her account. She want to know how much is the value she has made, how much is the transaction she has made actually. So I'll start with the brought forward balance on the credit side because it's a liability. I'll move on to the content again. I'll come back again and see how much is the value they had in owing. 3,400 was the amount owing, so I'll consider it as credit 3,400. Easy as that. I'll zoom a bit if you want to have a clear vision on what I'm doing actually, and I'll make this Excel also a bit. Give me a second. Where is this Excel? Yeah. So I have taken supplier, brought for 3,400. So let's move on to the next content. What they have given, they have said that on 1st October, in October, Shilpa purchased 860 and returned goods 55. So she purchased. Purchase is a purchase account debit, and what account credit? Suppliers account will become credit. Basic double entry, guys. So purchases 860 and she has returned it, so it's a return outward account credit, supply account debit. So I'll write return outward, or you can also write it as purchase return. That's both are same, guys. So return outward, how much is return outward? It's yeah, it's 55. So I'm done with return outward. Then I'm moving on to the next part of this question. I'm gonna move on to the next content of this part. I have During the month, she made a payment of 2,000. So when Shilpa is making a payment, cash account credit, supply account will become debit. So she paid cash or bank? I don't know. Actually, I just wanted to have a look onto that again. How much is the amount she has paid? Cash 2,000. Yeah, during the month she has made a payment. So I'll consider it as cash, guys. And what was the balance on the supplier's account in Shilpa's ledger? So I want to know what is the balance on 1st November. First of all, I'll finish this sum, so I can get the final balance here. So which side is greater? I think credit side is greater. It's 4,260, and I'll write 4,260 here also. So what's the actual difference between 4,260 and this 2,055? So I'll take 4,260 minus 2,055. So if I deduct, I'll get 2,205. And this will be next month balance, opening balance, mean brought forward should come under debit side. So actually, the answer should be brought forward 2,205 on the debit side. Let's see, have they given brought forward 2,205 debit. So answer is B. 11th B is the answer. So with that knowledge, we are moving on to the next part. I'm gonna use my spotlight. A flat above a trader's shop was rented out at $90 a month from 1st July 2018. At 30th June 2019, the rent receivable account showed entries for rent received from the tenant totaling 900. So actually, you need to understand for a month 90 means for a year how much they should get. So I'll open up a account now. What account they're asking? Rent receivable account again on 1st July 2019. I'm going to open up a rent receivable account. I think my camera is a big glare, guys, but don't see me, see the content. I might be a bit different on the other videos and this video, so don't see me, guys, see the content, because the camera glare is not giving the actual view of myself. Anyway, let's move on to the point I want to discuss. I'm going to take a rent receivable account now. Copy. So rent receivable account is an income account, guys, so I'm going to copy here. I'm going to write rent receivable account. So I'm done with that. So always remember to put these entries, guys. So income account. Oh, where is this one? Okay, so income account will have carried down balance, credit balances because it's an income. So I'm moving on to the content again to see what they have asked. A trader shop was rented of $90 a month from 1st July 2018. 30th June 2019, the rent receivable account should rent is rent received. So you have received a rent. They have not said bank or cash, so I'll consider it as cash. Cash, anything you can consider because they have not said anything. So $90 a month you should receive, but you have received 900. So for a year, how many months are there, guys? 90 into 12 should you should get $1,080 actually. But unfortunately, you didn't get $1,080. You got how much? You got 900 only. Now, when you send for income statement, guys, though you received it 1,080 or not, you received 1,080 or not, you should send 1,080 to income statement. Show how much the amount you should get completely. So income statement will capture. So I'll write IS. So income statement. I'll write income statement. Some students will be so lazy they will not even write. I'm not saying you guys. Some students. So some students will be lazy. They even doesn't write income statement. So when you learn with MCQs, learn this knowledge can be used into paper 2 also. So income statement is actually you get for 12 months. So it is 1,080 you will say. Here debit means income statement account will become credit. So 1,080 is done. Now the actual differences between these two accounts carried down will give you 180. So I'm going to take 1,080 both sides, and actually he didn't receive this 180, so it will become the brought forward on the next opposite side here. So I'll take 180 on the debit side because always remember, guys, when you are doing a double entry ledger account, the credit side's value you should bring to debit side on the brought forward. Credit side's debit side's value should be brought forward to the credit side. So I'll write here rent receivable account carried down. I will write here rent what is it brought forward. So actually the value is 180 on 1st July 2019. It is going to be 180 on the debit side. So let's look, is the answer 180 debit side? Yes, so answer is 12th one. D is the answer. So we found that. With that knowledge, we are moving on to the next part, guys. If you are getting tired for now itself, don't get tired, guys. There's a lot to do for your exams. Practice the last 4 papers. I'll try to put all 4 papers, 2019 May, June, 2019 October, November. 7707 papers I put for May, June, and October, November. It will be a blast if you can learn these 4 papers, particularly at least try twice before your exam. That will give you a good knowledge and it will always take you more than what you have expected. Hannah owned Alan 1800, or yeah, the question. So Hannah owed. Now you need to know Hannah owed Alan 1,800 on 1st June. Hannah paid 1,300 and remaining balances were written off. So Hannah is paying us money because now when you are reading a question like this, you need to consider who is Hannah, who is Alan. So Hannah is owing Alan and Hannah is paying. So which means you consider Alan as us. If we are Alan, Hannah is paying us money, 1,800 money she should pay us. But Hannah paying 1,300 actually, and remaining balance which is 500. So because 1,500 1,800 minus 500 will give minus 1,300 will give you amount of 500. This is known as bad debts. So you didn't receive. So bad debt is an expense account. So bad debts 500 is going to be expense. Now you can see bad debt is an expense account. Now easily you can understand that from bank account debit and bad debts account debit and HANA account values. You can see where is bad debt account debit. So bad debt account, the answer itself they are given, guys. If you can find out bandit is a asset, I mean expense, you can go with the answer. It's A. It's A. But you can again reconfirm it by bank. They are paying 1,300, so your bank account will increase. If your bank account increases, asset is increasing. And the other stuff is, guys, Hana paid 1,300, so Hana's account will credit by 1,800 because 500 plus 300, the total value we should decrease from her account. This is how you need to know, understand the basic things. Knowing the double entry is very easy. I don't want to take it into a ledger account because it's very straightforward, understandable. If you have any doubts in this particular area, guys, you can comment on the comment section, so I'll be able to help you. So let's move on to the next part we want to discuss. I'm going to erase this. Okay, so answer is A. So I'll take my spotlight again. Yeah. At the end of her financial year, Ling reduced the provision for doubtful debt account 500. Now, this is a very interesting question. Which journal entry record is? Now, remember, guys, when it comes to provision for doubtful debt account, many people doesn't know what is provision for doubtful debt. It's the amount of allocation money you have made in future that your debtors will go up as bad debt. So for that, you allocate a fund now itself for the future. So normally, provision for doubtful debt account will always be in credit, but people need to understand that there's something called provision for doubtful debt adjustment. If your this year's provision for doubtful debt is lower than your last year's provision for doubtful debt, then of course you made a over provision. So you need to know this assumption, guys. So last year I had taught you this in the other papers also. Provision for doubtful debt is lower than is lower. This year provision I'll take this year provision for doubtful debt is lower than, which means I'll make it higher. Last year. Okay. Last year provision for doubtful debt. You have made. I'm sorry, guys. Showing my seeing my keyboard. I'm in a different area today. That's the reason my videos are not that clear. But please don't see the video. Just see the content. Okay. So last year. Okay. What am I typing? This is provision for doubtful debt and last year's provision for doubtful debt differences. If your last year provision for doubtful debt is higher than this year provision for doubtful debt, then of course you have made a over provision. So over provision, how do we record? Over provision, we record it in this way. Yeah. How do we record? Do we record in that way? Income statement. Yeah. Provision for doubtful debt account. Provision for doubtful debt account. Debit. Income statement for account debit. Income statement account, or not account, guys, it's credit. So it's an income for income statement. That's the reason we make it as a credit. So you need to understand, if you have reduced your level of provision, okay, we say it as credited. Now here I will say what to say again. This year provision for doubtful debt, I'm going to take this year's provision for doubtful debt is bigger than the last year's provision for doubtful debt means. Okay, then you will have under provision. Under provision is an expense. Over provision is an income. So under provision. So under provision. What am I typing? Under provision. So under provision, you will have the double entry income statement account. Yeah, debit, not account. Income statement debit. Yeah. What account it will become credit? Provision for doubtful debt account credit. So now I have given you a clear idea how over provision under provision works. Here they are saying that at the end of the financial year, Link reduced the provision for doubtful debts by 500. If he has reduced the amount of provision for debt for by 500, means when I compare with the last year to this year, my this year's provision is lower than the last year, which means I have made a over provision, which means my double entry should be provision for doubtful debt account debit, income statement account credit, which because I have reduced my level of doubtful debt, which should be happened than last year I have reduced it. So you should go with this adjustment. If I have time, guys, before paper 2 I'll be doing a video on provision for doubtful debt, so don't worry, have this knowledge for now for your paper 1. This will be always helpful. So let's move on to adjustment number 15. So answer is B for this. Answer is B. Okay, so then we move on to the next part, adjustment number 15. How do you do adjustment number 15? What will be treated as capital expenditure? You need to know what is capital expenditure and revenue expenditure. There are two types of expenditures. Revenue expenditure is day-to-day type of expenditures. Capital expenditure is like you invest in non-current asset. All your non-current asset expense is, we say it as capital expenditure. So here the annual depreciation on office premises is a revenue expenditure because it's day-to-day. You will get depreciated. The cost of building of an office extension. The cost of repairing office equipment, the purchase of new computer for resale. Now you need to understand either A or C won't be the answer because both are revenue. It's repairing office equipment and depreciation. So the answer is very confusing from B to D, which you will consider. Are you going to consider the cost of building and office extension? Are you going to when you extend the office building, you will incur cost, so your non-current assets value will go up. Or are you going to take a computer for resale? You need to be very careful at this particular. The concern, guys, I will not take D as an answer because you are bringing a computer for resale, so it becomes an inventory. That business will be a computer business, so you can't take D as an answer. But office building extension is a non-current asset investment. You are extending, you are increasing the capacity of your building, so you need to consider answer for this 15th one is B. So we move on next part. Which methods of depreciation are used for these non-current assets? There are three methods they are given: diminishing, reducing balance method, devaluation method, and straight line method. So they're asking where does this 1 to 3 number falls. I'm going to explain you this very clearly. Non-current asset consisting of number of small items. If you have number of small items, where do they record? If a non-current asset which gives the same benefit in each year of use, a non-current asset which gives more benefit in the early year of each use. To have a good knowledge on this particular regard depreciation, you can refer my depreciation video. It's just a 46-minute video. I have explained you in and out about depreciation. It will be always helpful for you in your paper 2 and paper 1. So again, let me come on to the point where we want to discuss a non-current asset consisting of number of small items. Small items we depreciate under revaluation method. So answer one will come under revaluation part. So which it should be B or D. Non-current asset which gives the same benefit each year, which means you are going to deduct every year the same amount. That's done in straight line method. So number 2 is here, which means the answer is D, guys. A non-current asset which gives more benefit in the early years of its use. Earlier, when you're doing reducing balance method, you deduct a huge amount, and the next incurring years you will reduce a small amount. As I said, if you want to know how depreciation works, please watch my video. It is on. It is on. I have recently added that video, so you can see it as depreciation topic. I explained it in board. So let's move on to adjustment number 17. Um, Okay, guys, let's move on to the question number 17. Machinery 20,000 was purchased on 1st January 2017. The provision for depreciation of machinery account at 31st December 2018 showed the following entries. Provision for depreciation machinery account. So I just want to know a few calculation I need to do before I just find the answer, because they have said which statement is not correct. So for that I need to do all the correct entries and to find out which is not correct. So as you all know, 20,000 is the machinery's value. So I will calculate it, take 20,000, and it is bought on 2017. So I'm going to find the depreciation of 2017 actually, to find out the actual value of this. So 20,000 into 20% is the normal straight line method which they have used as a calculation, because I think they have said here 20%. Have they said anywhere? Okay, was purchased on. I can consider it as 20% because balance brought down is 4,000. How did I consider it as 20%? I can take in this way. I'll erase this off. I can find take 4,000 and divide by 20,000. So I will get into 100. If I do like that, I'll be able to get my percentage. Actually, 4,000 divided by 20,000 is 20 percentage you will get. So now I found 20% is the amount, but the value in income statement they have showed on December 31st is a different value. So 2018 they have done. I'm speaking about 2017. So 2017 they calculate depreciation as 4,000. As you can see, they have brought down that amount. So in 2018, I just want to find the depreciation. What I will do, I'll take 20,000. It is a reducing balance method because you might see 4,000 to 3,200 it has decreased, so it's a reducing balance method. Again, I said, guys, it's an important area to know depreciation. There are almost 3 marks you are getting at this paper 1, and paper 2 also it's tested for a prolonged time, so you need to be having a very careful understanding about what you're doing. So 20,000 is the amount they are given here. Into we should deduct the losses, depreciation 4,000, and you will get 16,000. So 16,000 is the balance you got as carrying amount. In that you need to calculate the 20 percentage of depreciation. So 16,000 into 20 over 100, if I calculate, I will get 3,200, which means 3,000 value which is on the income statement is also correct on the ledger account. Then what is your final value you should have in 2018? If you have carrying amount, you will have if they are asking the carrying amount, you have 16,000 minus 3,200 will give you the actual net book value, which is 12,800. So I had some assumption. I mean, cost is not 16,000, guys. I can show it as 20,000 itself, and your depreciation was 4,000 plus 3,200. So your actual carrying amount for 2018 is 12,800. This is the amount you are going to take for the next year in 2019. So with this assumption, now I'm going to move on to the sum. As you cannot see it very clearly, but I have already if you wanted to see my calculation, go it in 0.75 speed if I'm very fast, guys. That's all I can help you to make you understand a bit more. So here I have already got an idea. The annual depreciation of machinery is calculated at the rate of 20%. Correct. The balance of the provision with depreciation of machinery account is transferred to the machinery account. So normally provision with depreciation account, we don't transfer to machinery account, we transfer for depreciation account. So which means this is wrong. So B is wrong, B is the answer, because what is wrong, we should find it as the answer. So we found B as the answer. The diminishing reducing balance method of depreciation has been used to calculate the annual depreciation on machinery. This is also correct because 3,200 they are given on diminishing reducing balance method. D, the net book value of the machinery on 1st January 2009 was 12,800. So actually they are given 12,800 net book value. We found it in 2019. The opening balance is going to be 12,800. So assumptions on identifying 20% depreciation method as well as reducing balance method assumption, net book value is perfectly complete and it's accurate. So answer is B, guys. So with that knowledge, we'll move on to the 18th MCQ. I think 18th. So let's move on to 18th MCQ. Joseph's depreciates. Yeah, we finished 16. I remember. So Joseph's depreciate by his fixtures by 20% per annum using a straight line method. A full year's depreciation is charged in the year of purchase. During the year, repairs of fixtures 400 was debited to fixtures account. So what was the effect of correcting is this error? So actually they are given, they have taken 400 of repairs towards fixtures account, which what would happen if they correct this error is what they are asking. So if you actually note that one thing, you need to know that if you correct this error, actually how much they have charged depreciation, first of all you need to know. So in 400, if you charge 20% depreciation in straight line method, you'll get 80. So already they have deducted 80 in the profit. So what is the amount they should deduct more from 400? 400 minus 80, they should deduct more is 320. If you can find decrease 320 itself, you have found the answer. It should be decrease and decrease 320. Why effect on book value of fixtures 320 should be deducted? Because book now normally on cost we have taken depreciation deducted 80. Again, when you are removing from the book value, now you will have like this, no guys, in your balance sheet cost, you will have one column cost, accumulated depreciation, and also you will have another column net book value. Actually in 400 they have calculated, they have removed 80 here, and they got final net book value is 320. Now if I want to remove from out of this amount, I should not remove 400, I should remove this 320 to get my book value, because they're asking the book value. If you see here, the question is about book value, the book value of the fixture. So I need to remove 320 if I want to remove the whole total amount. So giving that into consideration, A is the answer for 18th one. So we are done with adjustment number 18 also. Let's move on to adjustment number 19, then I'll erase it off. So we'll have a clear picture on what we are going to do next. 9 MCQ. So 19 MCQ, which item would not appear in sales ledger control account? I explained you guys how sales ledger control account works on 7707 paper code. Given a full set of sales ledger control account. Here I remind you, sales ledger control account means debtors control account. So you need to know this. It is a debtors control account. Sales ledger control account means it's a debtors control account. So I'll write here debtors control account. Okay, debtors control account. Then what do you have in the next part? You have, yeah, you have which item would not appear in sales ledger control account? Discount received will come under purchase control account. These payments received will come under what do you say, sales ledger control account. Refunds paid to credit customers and refunds paid to credit, returns paid from credit customer. Both are debtors control account means credit customer. So C and D will come. B, you might debtors might pay payments, even purchase account have, but actually what will not come to sales ledger control account is discount received. Instead of discount received, what will come to sales account is discount allowed. So with that understanding, we are moving on to adjustment number 20. So answer for this is actually A. We have found A as an answer. Okay. Then we are moving on to that. With that knowledge, we are done with 19th MCQ. 20th MCQ, it says that Carlos is preparing a sales ledger control account. Where will he obtain information about contra entries? Normally, in sales ledger control accounts balances, you will never have it in cash book, because cash book will have only bank balances and cash book balances. General journal, yes. The answer is general journal. Again, theories you need to know very carefully, guys. Why general journal? The reason, sales ledger control accounts normal balances setting off, you cannot set off under sales ledger. I mean, you can't set off on the sales journal, or you can't set off on the purchase journal. So setting off basic transaction, you will record it under general journal. So this is what you need to know. We can't set off it under sales ledger or purchase ledger, because it's control account adjustments. So you need to do those adjustments. Only you can get the information under general journal, because in sales ledger and purchase ledger, you don't do setting off, guys, only in general ledger. So journal. So let's move on to the next part, guys. Having that assumption in mind, I'm gonna erase this off. After preparing her income statement, Emma found that a bad debt 1,500 should have been written off. No adjustment had been made for rent prepaid by her 2,800. The draft profit for the year was 35,000. What was the profit for the year after this adjustment? Easy. Now I'll take this value. Actually, your draft profit is 35,000. Bad debt you have not removed it seems. So I'm going to remove bad debt because bad debt is an amount of expense you should remove it off. So here if you remove it exactly, you will remove 1,500, you will get 33,000 actually final balance. So balance 33,500. Now, after getting this, now you need to know no adjustment had been made for rent prepaid by her 2,800. So she has made a rent prepayment. So prepayment has been added to income statement. They have already deducted this 2,800. Because they have already deducted this 2,800 to get this draft profit, what you need to do, prepayments normally you will exclude from the income statement, but they have not made an adjustment for this. So rather than excluding it from the income statement, they have added it with the rent prepayment rent account and they have deducted. So your profit has been understated because they have added they have deducted this 2,800 also. So we should exclude this from income statement. I will add it back because this is an amount we should be excluded from the income statement. It's not an expense, guys. So I'll write rent prepaid. I will add it back again, 2,800. So I'll get 33,500 plus 2,800. What is my balance? I will get, I think it should be 36,300. Answer is C. So C is the answer. I will record here C. We're done with that. Then we are moving on to this 22nd adjustment. I'm erasing this, guys. Clear all my drawings. Okay, I'm gonna take my spotlight to explain you a bit clearly. Now the question is, the following balances were extracted from Sabina's books on 31st December. What was the capital employed? Know the formula before you write this, guys. This is the ratios area. Capital plus non-current liability is what we say capital employed. So capital plus non-current liabilities, right? So people find capital and they don't find non-current liability. Here the non-current assets and current assets. First of all, I'll take non-current assets is 65,000 and current asset is 13,000. So actually I'm going to deduct with the liabilities. It is altogether 78,000. So then I have assets 78,000, liabilities I have current liabilities 9,000 and non-current liabilities NCL as 7,000. So altogether I have 16,000. Now what I'm going to do is I'm going to take my 78,000, and because A equals C plus L is the formula, guys, you all know already. So A equals C plus L, right? So if I'm going to take this L to the next side, A is 78,000. So A is 78,000 minus capital is how much? Capital is almost 16,000. So I'll get my liability is 16,000, so I'll get a capital of how much? 62,000. So now I got my capital 62,000, but this is not enough, guys, because 62,000 plus non-current liability, I should add how much? 7,000. So which is capital employed will be getting 7,000. So I'll get a balance of 69,000 if I'm finding capital employed. So for capital is 62,000 plus non-current liability. If I add, I will get capital employed. So CE is how much, guys? I got 69,000. Okay, so I got 69,000. So I gave a clear understanding about how capital employed works. That I have given you a good knowledge on what we are doing. So answer is, guys, let me take the answer. C is the answer. So 22 adjustment, C is the answer. Let's move on to the last 8 questions. Yeah. Sarah and Fatima, what have they said? Sarah and Fatima are in partnership. Sarah is entitled to a partnership salary of 30,000 per annum, and the balance of the profit is shared equally. The profit for the year was 180,000. What was Sarah's total income of the business? So they're actually asking a current account, guys. You all know how a current account works, but still, as some of you students will not have an idea about how current accounts work, I'll just do a small current account here, how it should be and how you should record. So I'll take a few columns here to make this. It's not a mandatory thing for me to teach these current accounts, but I think if you can learn this, it's better for you before your paper. So current account always will have, I'll write here current account, guys. Now there are 2 people in this business. I'm going to take 2 people's name. Actually, what's the name? Yeah, I'll make it a bit smaller, guys, so I can put current account very clearly. Okay, I'll take three accounts, and I'm gonna what's this? There are two people in the business. Actually, I don't want to. Yeah, I'll erase this off this side. Delete. So now I have what's their name? I have date. This is how it should be. Details. And there are two partners. What's their partner's name? Let me move on to the question. Partner's name Sarah and Fatima. So I'm gonna take Sarah first because they're asking Sarah's value and Fatima's value. So this is how you do the sum, guys, and the same details will be taken to the debit side and the credit side. Now this side is debit side, and this side is credit side. So you all have you. I think you all can see the Excel sheet very clearly. So here details Sarah. Now let's move on to that. Normally, every profit a business makes should be taken into the credit side of Sarah's and Fatima. I mean, every profit they make individually. So here, Sarah is entitled to salary of 30,000 a month. So I will take Sarah is getting a salary of 30,000. They don't have any brought forward balance, so I'll take directly Sarah's value 30,000, not 3,000, 30,000. So I have taken 30,000 for Sarah. Then they are saying that after that they are saying there's a profit share. Normally they share the profits equally. So if they are sharing the profits equally, right, they are sharing the profit equally. So in 180,000, 30,000 is given as salary. So how much is the balance you have to share it equally? You got 150,000. So 150,000 you share equally means divide by 2 because there are two people. So per head you will get 75,000. So Fatima gets 75,000, Zara gets 75,000. So I'll erase this off and I'll move on to the part. I show here 75,000 Sarah got and 75,000 Fatima got. This is profit. So I have given a clear understanding about profit share. Now what's the total I will take for Sarah and Fatima? The total is how much is the total? For Sarah is the amount 105,000. For Fatima 75,000. But they didn't ask about Fatima. For your understanding only, I did 105,000 and 75,000. So what is the carry down balance of Sarah? It's 105,000. So that's what the answer is, guys. So you need to find it's that easy. I have given the format again on 7707 papers. Just if you have time, just watch it so you'll have a good understanding. So 105,000 is the answer for Sarah's total income from the business. With that assumption, we are moving on to with that answer, we are moving on to the question number 24. Okay, so let's move on. 24th adjustment, sports club, very easy adjustment. If you want to do this, you need to have a good knowledge on prepaid income and accrued income, guys. It's very easy. A sports club provides the following information: subscription received in the year is 12,000. Subscription owing at the end of the year is 1,200. Now, what is this owing? Owing means it's a accrued income, guys. So you need to know what is owing first of all. So owing means what? It's an accrued income. Owed means it is a received it in advance mean it is prepaid income. So owing is accrued income. So I need to know if I am going to do subscription account where this accrued income and prepaid income will come always. So if you do not know where this prepaid income and accrued income will come, you will not be able to do. So let me take an Excel sheet and I'm going to take a account subscription account to do this sum. I'm going to copy this sum and I'm going to paste it here. So I hope you guys can see this. Here it is rent receive subscription account which you got subscription account. So I'm gonna copy this now. Okay, now I want to delete this part also. So you need to understand one thing, guys. Subscription account brought forward if it is in debit means an accrued income. Credit brought forward means it's a prepaid income. Debit carried down means accrued income. So I'll write prepaid income. So PI for your understanding, guys. This is AI. So this carried down will become uh, accrued income. This is prepaid income. Now let me move on to the question again to find out how this answer works for this part. So let's move on to the point. It says the subscription received for the year is 12,000. So when you receive subscription, it should come under a credit side because it's money you are receiving. So reception payment account debit, subscription account credit. Reception payment account is like what to say? How do you say? Receipt and payment account is like the cash book account. So when you have receive money, it's like in cash book. You should consider it as debit. So 12,000. 12,000 debit, credit we have received, and received in the payment account, it will become debit. Now moving on to the brought forward balances, you might see subscription owing at the start of the year. So owing at the start of the year, you will have 1,200 brought forward because it's an accrued income, as I already said. And again, they are saying subscription owing at the end of the year is 800. So I'm going to take 800 on the credit side. So altogether, how much is going to go to income and expenditure is the question. So how much you are going to transfer income and expenditure. So 12,800 is the balance you have here. I'll take to these two balances here, and I'm going to deduct this 1,200, so I'll get 11,600. So if I can, because here it's debit means income statement is going to be credit, because income and expenditure is almost like income statement. So answer for this is A, guys. I have done here adjustment number. A is the answer. Then we move on to the next part. The statement of financial position of, let me erase this off. Okay, so the statement of financial position of a sports club, including the following: subscription in advance. As I said, it's a prepaid income. Subscription in arrears is an accrued income. So accrued income is a current asset. Prepaid income is a current liability. Bank debit, inventory is a current asset. Amounts owing to surplus 200. Now they're asking what was the total of current liability. As I said, in advance, so when you receive money in advance, you need to pay it one day. So then of course it becomes a current liability. This 100, again, do you have any other current liability? As I said, subscription arrears is current asset. I'll mark it down there. So when you're doing the paper, you will have an idea. So this is current, what do you say, current asset. So I'll write CA. Subscription advance is what do you say? It is a current liability, CL. Okay, so you need to know this very clearly. Then we have bank. We don't take as an asset. We consider it as an asset. Inventory of replacement is an asset. Amounts owing to suppliers is a liability. So 200 plus 100 will give you a value of 300. So answer for this is A. Very straightforward. We can find it out. So with that knowledge, we are moving on to the next part. Stop. Yeah. Yeah, guys, I feel a bit thirsty on what I was doing, so I'll have some water because it's a continuous class I'm doing. I know that you guys have exams on Monday. I'm not doing this for anything, guys. I just wanted to help whoever watching this video, whoever doesn't have knowledge about accounting. I just wanted to help from my heart. Whatever I can teach anyone around the world, it will be a great thing. It can be something. You will not get everything what you are seeing it. Something from my side, what I can do. I'm doing this channel. Share to your friends, guys. They learn a lot of things from me. So let's move on to the point. A trader's sales were 300,000. The markup was 25%. What was the cost of sales? So you have 60,000, 35,000, 225,000, 240,000. How do you find the markup? Very easy, guys. Now you need to find the cost of sales. So sales is up, cost of sales is down. So when you are coming from up to down, what you need to do, you need to divide from the value. How to divide, guys? I'm going to show you this. 300,000 is the actual sales. If you are coming to cost of sales, you need to take 300,000. This is a formula, guys. Divided by 1. Consider it as 1 always. 1 plus now 0. 25% I can consider it as 0.25, because 25 divided by 100 I'll get 0.25. So 1.25, if you divide, you will get 240,000. So answer is very specifically easy. If you are keeping a margin, you need to multiply. If you are coming back to cost of sales, you need to divide. So this is how you take a cost of sales answer. It's very directly they are given. So answer is for this fourth one is the answer. So we found it. Whenever you are coming from sales to cost of sales, divide it. When you are going from cost of sales to sales, multiply it. Okay, so then we have 27th MCQ. Let's move on to that. Okay, guys, let's look on to the last four adjustments for today. What is not a voluntary deduction from gross wages? So what is not voluntary deduction from gross wages? You're not perfectly giving with your knowledge. It's just taken from your account. So normally donation to charity you voluntarily do, pension contribution you voluntarily get it, social club subscription you voluntarily pay. So what you get, what you are deducted without your knowledge, indirect taxes we can say it as income tax. So they will charge you indirectly, not directly they'll charge, but you don't want to give it with your intention. Still the government will take from you. You like it or not. So then we have the next adjustment 28. So 27 is B. It's easy one, guys. So 28 we have how is the current ratio calculated? You know the format of what to say when you're doing current ratio, current asset divided by current liabilities is what we say current ratio. So current asset divided by current liability is current ratio. So answer is C. Asset minus liability is wrong. Asset divided by liability is also wrong. Current asset minus current liabilities is working capital ratio. Now, if they ask working capital ratio, sometimes you say that this is working capital. So current ratio, what do you say? Current asset divided by current liabilities. So you should not get confused, guys. So then we, sorry, then we move on to the next part. Which ratio measures liquidity? Again, I have uploaded the ratios, guys. You can have a look on my channel. The ratios, it will be helpful for you. Which ratio measures liquidity? Gross profit divided by sales is gross profit ratio. It's a profitability ratio. Net profit divided by sales is also profitability ratio. Quick ratio, asset test ratio. This is liquidity ratio. So you need to know which ratios belong to here. So answer is number C. And return on capital employed is also a profitability ratio. So how do you calculate quick asset ratio, guys? They are not given, but I'll give you for your knowledge. You will have current assets minus inventory divide by current liabilities, right? So you find, so return on capital employed, how do you find? Net profit divided by capital employed. So that's how you find. I have given how to calculate capital employed on above sum into 100. Now normally these net profit profitability ratios all will be multiplied by 100, but liquidity ratios you will show it under number of times. So with that, the last part we are going to discuss for today, which accounting principle is referred to in the following statement: an accountant should not overstate profit and should provide for all possible losses. Consistency speaks about every you need to apply the same concept. Dual aspect speaks about double entry. Matching accruals speaks about how you need to compare your expense and income. Prudence speaks about don't overstate profit and provide all the losses as much as possible. So you need to know the definitions, concepts. So answer is D for this, guys. With that, we are ending up this session today. I hope you guys have given I have given some sort of idea on what we need to do in 2019 October November paper. So you need to understand one thing, guys. With a lot of tight schedule, I'm trying to teach something for you. So try to maximum use take maximum use of it. And please do not forget to subscribe my channel and also to inform your friends that there's a channel like this. They can learn accounting, economic, business free before the exam. You can subscribe my channel and you can get notified any videos which I'm gonna put in future. See you guys on another video. Aslam Khan with you, always to help you with a pure heart. See you guys.